It's Sunday the 11th of August, time for a video update. Start with the Aussie dollar. It's been a tricky year for Forex markets. As you can see, at the beginning of the year we didn't really do an awful lot. We were trading mostly sideways, in fact all the way through till April really. If you were trying a swing trade, you wouldn't really have been able to run a position for more than about a week before the market reversed. We had a decent drop from the middle of April through to the middle of May. Certainly I'm not quite sure how I would have predicted that, even with the hindsight. Okay, we did hold resistance at the 200-day moving average. This trend line of course wasn't in place until that peak. I don't really see exactly why we turned around here from a technical perspective either. And then of course we traded sideways for the last 2 months until the market retested that 200-day moving average and that trend line, which was certainly relevant because that joined the peak from late Jan to mid-April, and then the market did just collapse. Again, the technicals didn't necessarily indicate that the market was going to have such a big dive, but there you have it. We did have a significant move to the downside. Now, what is interesting is that we tested this trend line, overran it by quite a lot, at least 30 pips, and really from a technical perspective this was quite negative because we'd not only broken the we'd broken the 2016 low, and then we broke the Jan low, that Jan spike low. So really once we broke that, to me that was really quite negative. So I was quite surprised to see such a strong bounce back, I will admit. But this did leave a bullish candle for sure, showing that the buyers are ready to push the market higher, and indeed they did that. And in fact, that's what I wrote on the report, that we had a bullish candle in oversold conditions. This was a buy signal targeting a selling opportunity at 68.20, 68.30, and of course we did hit that target. We would have only been able to buy in at the beginning of Thursday. I certainly didn't catch the whole move up from that bounce. I didn't expect that bounce. And then we had our selling opportunity at 68.20, 68.30. That worked quite well with a dip back to 67.75. So I think my best guess now, I've got the hourly chart on here as well. My best guess now is that we trade sideways. I don't really think that we're going to get a strong recovery in this market yet. I think the best bulls can hope for would be sideways movement. I'm just trying to scrunch this hourly chart up so you can see all the data. You can see we've got some fib levels at 68.21, just above 69.00 as well. I've now scrunched it up way too much, so let's open that out again. We're getting tangled up in the short-term moving averages here, as you can see. So we're obviously going to have to break up through 68.30 this week, and if we can do that, I see no reason why we can't push up as far as 69.00, 69.10. That would be the next strong resistance level, and I'm pretty sure that would be worth a short position. But that would be a reasonable target on a break higher. The weekly chart for the New Zealand dollar also shows a lot of sideways action over the last few years. More recently, we had a sustained period of sideways moving prices beginning at the end of last year, and certainly through the first 3 months of this year. Then something more significant to the downside. I'll switch to the daily chart. This was a nice move, difficult to have spotted it, I think. Anyway, we had a little double bottom then and a decent recovery. Again, I'm really not sure why we reversed here. These markets have been quite erratic. We did manage to bounce to the 61.8% fib, and then of course we've reversed, wiped out all the gains, and again broke the 2019 low. So this was pretty negative, but we have bounced back. So I think this chart actually remains quite confusing. As a result, I've been focusing a lot more on shorter term charts in recent months, more than I would normally do. I'm a trend follower. That's one of my key rules, follow the trend. So I've had to focus on the shorter term charts in order to follow any trend that is worth respecting. So this is the hourly chart again. 100-hour moving average is the blue line. That seems to be having a decent effect, and these short-term moving averages have been something that have been worth watching. The markets have been respecting them fairly well. You can see the blue line just going back here has acted quite well as support and resistance, and when that has been broken, the red line, the 200 period moving average, has done a good job of catching the next level. So these have been worth watching on the hourly charts. You can stick them on your own hourly charts. Again, the blue 100-hour moving average has caught this bounce, so and we've turned lower again. So still looks quite negative. Still looks like we're in a bear trend for the short term at least, and holding below 64.75, 64.85 is negative for the New Zealand dollar at the start of this week. in my report on Friday, I had that resistance that we saw in the Aussie dollar as a selling opportunity. I've still got that as a selling opportunity. And we had first resistance at 64.70, 64.80, which is what I just showed you on the New Zealand dollar chart, but a break above there would target 65.30, 65.40. Dollar yen is another candidate for best sideways trading market over the last 2.5 years. You can see more recently we've turned lower. Now we've hit good support from a trend line that goes all the way back to sort of mid 2015. So that is a good 4-year trend line, and we've just bounced off it. Bit confusing as we overran as far as 105.25. I've got the trend line at 105.60. You can see on the weekly chart that isn't much of an overrun, but when you look at the daily chart, that's a quite significant overrun. Anyway, a shorter term chart trend line that goes back to late April seems to have caught the downside now. So we're oversold on the daily chart. I think there is a good chance of a good recovery for the dollar yen. It would also fit in with the longer term sideways trends that we're seeing, because we've certainly tested or got close to the lower end of recent ranges. I say recent, yearly ranges. Oh, there you go. Look at that trend line. Beautifully caught that one. I should have had that trend line on before. So there's another good reason why the dollar yen could see a decent recovery in the weeks ahead, days, maybe weeks ahead. If you're looking for a swing trade opportunity, this seems to be the best one I can find so far. Obviously, if we do break below 105.00, that is going to put the ball back in the court of the bears. Just reading my report from Friday for the dollar yen, I said that the dollar yen was likely to have stabilized with signs of buyers reappearing. Looks like I jumped the gun by a day there, because we did break lower. Now, what did I have here? A break below 105.45 is a sell signal targeting important support at the January 2018 low. The January and also the 2018 low at 104.95, 104.65. Now, as I just showed you, we bottomed at 105.25. So, you know, only 30 pips above that important support level, the buyers seem to have come in. And when you combine that with the trend lines that I've just showed you, I do think there is a very strong chance that this market will recover. I certainly think that a long position is worth the gamble. The euro yen has had a much nicer trend to follow. Not easy, I'll admit, but a nicer trend to follow, a clearer trend to follow, certainly to the downside over the last 1.5 years. It's a combination of, well, the euro has actually been quite steady against the dollar, so this is more a symptom of yen strength than euro weakness. But anyway, there you go, you can see it. Now, we broke the January low, which is 118.72. We got down as far as 117.66. Now, I had a buy down here at around 117.90, 117.80. Why did I have that? One of my subscribers asked me during the week, actually. It was purely because of this gap. I'd seen how oversold we'd got, and even though we broke lower, so to a lot of people that would have looked quite negative. When you go back over the weekly chart and you look back 2 years, you see this big gap being filled. I thought with significantly oversold situation going on here, that gap I thought could easily hold and we could get a bit of a bounce back. And we did get that bounce back quite nicely. So the longs that I suggested here worked really quite perfectly, and we came right up to this selling opportunity at 119.80, 119.90. So that was a perfect little move there. You don't catch moves like that very often. So we caught the long down there, and we had as much as 200-point rally for those longs, with then getting into a short position up here. So a really nice move. So these clearly are the levels to watch now. That sort of 117.80, 117.60 area on the downside, and the 119.80, 120.00 area on the upside. This support is not as strong as the one I showed you in the dollar yen, so I wouldn't be inclined to get too long down here. Obviously, if we get a double bottom with a nice bullish candle, that would be something that I would be more interested in getting into a long swing trade position. Now, the euro versus the US dollar has been truly horrible for anyone who wants to swing trade. You can see most weeks, well, we haven't had a move in one direction for more than 2 weeks, and more recently we seem to be reversing each week. So, as I say, swing trade positions are almost impossible to hold for more than a day or two. Slightly bullish candle here with that hammer. It produced a good recovery last week. Right, looking at the daily chart, we're getting tangled up in the 155-day moving average, as you can see there. I did have that as strong resistance, so I'm quite pleased that that did hold at least, especially as it has been quite difficult to spot any decent trading levels in the euro versus US dollar. The fibs there not helping us at all. So yeah, it's difficult to find a good entry level, so I'm quite happy that that did hold. And if you followed my reports and you were selling up there, that seemed to work every day, or certainly for the last 4 days. So that's going to be key. That's all I can really say on this market. Now, cable's one market where I've had a lot of luck running swing position. I've kept my subscribers short for most of this move, or certainly a decent part of this move, I believe. It's not been too hard, even with the fundamentals. It's been fairly obvious that the pound was going to head lower. Fibonacci levels working quite well. The first 23.6% fib obviously held the bounce this week. We just couldn't get through there. So getting short up here really worked every day for you cable traders who are following me. Now Friday we've broken lower again, so clearly bears remain in control of this trend. Not a huge surprise. Let's have a look and see if there's anything on the downside that I need to be aware of on the weekly chart. Not really. We are heading towards 119.79, which is the 2017 low. So I guess that's going to be the most significant level of the week. We're below 121.06, which was the next low for the year. So watch 119.79, break below 119, should we say 60 would certainly be more negative. I don't necessarily think that's going to hold. Okay, that's it for the Forex markets that I cover. I'm going to do another 1 or 2 videos looking at gold, oil, and then the stock markets. Because I post daily videos of my technical analysis and trade ideas, I'm asked every week which platform I use. So I use Metastock. I've used this for as many years as I can remember. I've tried so many different platforms, but this is by far the best. The main reason is because the quality of the data is just excellent. That's obviously the most important thing for a technical analyst. You've got to have quality data. The other thing is I can have as many windows open as I want, so that I can look at multiple time frames all at the same time. This is absolutely critical for me. It allows me to see all the different levels in all the different time frames, so I can see which line up and which would be the best levels to trade. So I've squashed this onto one screen. I usually have this spread out over 2 or 3 screens, but I can't record them all at the same time. So this is why I've shown you this. Now I'm going to just widen it out so you can sort of see what my main screen looks like. So I'll have 3 time frames on my main screen. So I've got the weekly, which I can quickly switch to the monthly, which I'll do maybe once a week, once every 2 weeks, just to keep an eye on whatever levels might be important to me there. And then I've got the daily chart and the hourly chart, and on my other screen I've got the 4-hour chart. So I can very quickly look at all the different time frames, and I can compare them, and then I can blow up. I can sort of expand one screen if I want to. So for example, if I'm trading very short term throughout the day and I want to have a look at the 4-hour chart, then I can quickly do that. Now, one of the other most important things that I can show you is on other platforms I've used, you put in a trend line and then you change the time period, and the trend line jumps all over the place and it's not relevant. You have to keep redrawing your trend lines. This is just frustrating and a waste of time. With Metastock, that doesn't happen. You can quickly switch time frames, as I've just done. I'm now on the 30-minute, and as you can see, the trend line is absolutely bang on accurate still. So this is another big plus. If I go to 10 minutes, once this loads, you'll see that the trend line again is absolutely bang on the data. So it's just simple to use. It's very straightforward. The data is very accurate. The trend lines and all the tools are very accurate. I know that when I pick a level, I can absolutely. I do believe that. Well, my subscribers tell me that it's amazing how I manage to pick pinpoint levels, and really, it's all down to this system that allows me to do that. So it's worth paying a little bit of money out to get the right data. You're going to make that back within one trade. Do yourself a favor, go to the metastock.com page, which gives you all the information you need. This system can scan markets with your criteria to find trades for you. You can backtest with it. It's really quite incredible. Go to the Metastock homepage, click on what is Metastock, and it'll take you to this page, and you can watch the video about it. All the information is there. When you're ready for a 1-week free trial, just go to metastock.com/daytrade ideas. You won't regret it.